Okay, guys, welcome to today's video. It is day 76, yeah, of the SMC Trade with Smart Challenge. Wonderful. So today, basically, I'll be doing a trade review. Yesterday we had market overview on based on the higher time frame perspective. We were able to do a market analysis to know the overall direction based on how market has been reacting on higher time frame. And I said, from understanding the directional bias on higher time frame, right, you tend to know the long time direction of the market if it shows you, right? Not every time. If there's a reaction that it shows you, you get to know that, and you can also trade with lower time frames after understanding. So yesterday we did market structure, and I was able to catch. I think this is the particular setup I had doing that trade. So I'll be showing you guys how I call this setup. Of course, the sell is obvious, but a lot of people were surprised about the buy setup because I didn't really show where I got this order block from. Right, so I'll be doing that analysis today, and this is how the trade played out. Right, the sell triggered, right, hit TP, the buy triggered, right, and it has also almost the TP. Right, current price action is still going to hit that target. Okay, so this was a beautiful SMC setup. Basically what we know, what we have talked about. So it's just how to see it, how to know, right? And I'll be giving you that explanation in today's video, right? A lot of people, I think someone reached out to me, was like, I love trading BTC and ETH. Yes, right? My major pairs are BTC. My major pair is BTC, right? On crypto, right? While on Forex, I trade mostly XAU, right? Gold. But on crypto, I trade BTC and Ethereum, right? But if you look at ETH now, you'll be like, what has been happening on ETH? No good price action on ETH. You can see when BTC has been buying and selling, ETH is actually in a range. So that's why I say I just abandon it, right? But what most people or newbies trader don't know is when you come to the market, if you go to the fast time frame, this is what ETH has been doing, right? Noise. This is basic noise. So I don't want to be caught trading here, right? Looking at it on the 1 hour time frame, still noise, no structure shift, so it's basically ranging. So after this aggressive dump we had, of course we caught some of these moves from all the way from these highs. We caught the sell. The only one we missed was this one that happened here because our checklist, the trade did not actually hit our checklist, right? And I explained that. Then based on the current price action, it's in a range. I don't want to be caught struggling to look for setup, right? I love going into chart. So if you go to pairs, most people just go to pairs and you just want to struggle to look for just once you go to your 4 hours time frame, identify something, right, that tells you that, oh, I can easily trade this thing, I can easily look for setup. Identify those things. Once you see them, it gives you a trade opportunity. That's how I pick pairs. So when I came to ETH, I was like looking at it, nothing. Then I went back to BTC and I was like, okay, BTC is showing me something, meaning there might be an opportunity, right, to catch a trade on BTC, right? So coming to BTC, you can see the price action is actually different from ETH, right? While ETH has been in that range without moving, being in one spot, BTC has been doing different moves. Okay, so now back to this setup. How I was able to catch this setup, this beautiful setup right here, right? You can see it. So it's pure SMC I observed. So based on our structure, if we know that if market is moving from one levels to another level, especially from tapping from a particular imbalance, remember we talked about sweep and grab, liquidity sweep and liquidity grab. If market takes out a certain liquidity and shifts structure, right, and there is a break of structure after grabbing or sweeping that liquidity and market shifts structure, it shows you that, oh, there's tendency that market wants to go down. Okay, so that's what happened here. So when market sold, when BTC sold aggressively from this side, right, I saw that dump all the way here. Then all of a sudden BTC pulled up into an area of imbalance, then sold down. Now this sell from an area of imbalance, right? Now we know that there is an order flow region here on BTC, right? I know when BTC around this area, a lot of people were expecting price to just go tap into this region and continue selling. But what I saw first was a tap on a particular imbalance here, then market sold to the downside. Now this was what I saw. Now I'll explain better. Now I saw this first on 1 hour, but that does not give me a go ahead or a confluence because it's just a shift on 1 hour. Then I went to 4 hours time frame. Then I look at what I saw on the 4 hours time frame. Okay, there was a shift. You see a body candle close. Okay, and immediately market tapped into this particular level of imbalance right here. Okay, and you can draw up that imbalance right here. Market tapped into it and shift stock. So immediately I saw this, I was like, okay, I'm going to wait. I'll watch price action on smaller time frame. Let me see if there's a particular SMC setup that can appear. And what must I see? I must see a particular form of inducement, right? So immediately I went to the 15 minutes time frame. Structure has shifted on the 4 hours, right? I see that close rejection, and of course, anytime you see a low like this, I know. Let me explain. Let me go back to that 4 hours time frame. Anytime you see market, right, dumping, and of course we did general overview that, oh, market is bearish, right? Anytime you see market makes an aggressive dump, then all of a sudden rejects like this without going higher to break structure, it means this level is usually a target. There will be form of liquidity resting here. Take notes, right? I think I explained that with ETH. That's why you see ETH is not even making buy side move, it's ranging. There is a liquidity at the side below that it might sweep up then go down aggressively to take out that liquidity. So immediately I saw this, I knew that, oh, this is an area of liquidity because of this aggressive rejection, right? Because immediately after market reject, it did not just go ahead to tap into a sell side order block, it tapped into an imbalance and rejected. So when I went to 15 minutes time frame, I saw things clear, right? So on the 15 minute time frame, I could see where this rejection happened from was at this particular point of imbalance right here on the 15 minutes time frame. So immediately price tapped into the mid level of that 15 minutes imbalance. Remember, before I came into the 15 minutes time frame, I confirmed that shift on the 4 hours, right? This target, this liquidity resting here is a liquidity to target for me, right? So immediately I saw a low created, a high tapped into a 15 minutes imbalance. Then on the 4 hours time frame, there was a structure shift like this. I was like, okay, this is an area that price rejected from. All I need to see is a form of inducement, right? So I want to see SMC setup. So if market has tapped into a sell side and shift structure, my eyes is looking at this liquidity level. Okay, this was around this zone. Now market was playing like this, so this was that shift I saw, right? This was that imbalance on the 15 minutes time frame. This was the shift. So immediately I was marking areas for that market will use as inducement. Okay, so if you look at this, then all of a sudden market made a pullback, right? A pullback after this shift, a pullback, then came down and broke structure again on the 15 minutes time frame. Now this is a structural break on the 15 minutes time frame, but on the 4 hours, 1 hour, it's just like a sweep. So market creating that form of inducement immediately. This was the structure that came to mind, right? And SMC, when you have something like this, right? Okay, then you have a pullback. Okay, so you know that price can retrace, take this as inducement, tap into that level of rejection, and we can get a sell, right? So this was the setup that was playing out, right? This tapping as inducement. So I'll need to find a good supply region here, and of course market has shifted from another high time frame perspective. So this was the kind of setup playing out. This was the setup that played out here. So immediately I saw that, I knew that this was a form of inducement. And if you zoom the structure very well, you see that there's a level of what? Imbalance resting here. Okay, there's a level of imbalance resting there. So immediately I saw that market has created this form of inducement. I cross-checked, then market came down. Then this was another confluence, right? When market created this inducement level here, okay, when market created the inducement and sold to the downside, it also created a form of equal lows right here. It took out this liquidity, but it formed a form of equal low. I was still targeting this region, and also I would tell you where my take profit target was because of a structure, a buy side structure on a higher time frame. But before then, let's finish with this, right? Let us finish with this move. Okay, so once I saw that market created this move, I was like, okay, I would be looking for a particular POI here, since there is an inducement and there was a structural liquidity here, right? So I have form of like equal liquidity, equal regions of liquidity right here, right? Most times I don't draw it like this, I just stretch it from the higher one. So immediately I saw that, I knew that, oh, there will be a POI here that market is likely going to sell from. So once I got that POI, I wanted to catch sharp entries. So you can use your Fibonacci to measure that, right, from the lows to the highs. Similarly, I saw a low, a high. I was like, okay, good. I can what? So this is how I targeted that. I used my 88.6. So most of these trades, based on experience, you must have seen. I've seen structures like this several times, right? So when I saw this, I was like, okay, it's a good setup. You can see here, I marked out this region. I was like, oh, it's a good setup. Good setup, right? Beautiful area to catch a trade. So that's how pick my point of interest. You can use the order block directly. It doesn't matter, right? Sell. So if you're using the order block, you can use the 15 minutes order block. Still the same thing. Still going to give you good trade. So I targeted this region, something like this, right? And of course, here would be my target, but I had another target. But here's the obvious target for this sell trade. But because I had also a buy setup that I analyzed from higher time frame, I'm going to show you how I do that. But for this, since market created a new low, this can be your obvious liquidity target, right? And market now created a form of a low, came back down. So this was like three equal lows, which are, or two equal lows, which are levels for liquidity. So that facilitated the buy side move, right? So but looking at this is just how the setup played out. Okay, this is how beautiful the setup played out. So something like this, you would see this on your chart very well, right? So the confluences I had were the sell-off from an imbalance and the shift in structure. That was one confluence, an inducement, and also I had a buy setup, and I knew market had not tapped into that buy demand region where lots of impulsive power would be resting. Now let me show you how I got that region. So on the 4 hours time frame, if we refresh this very well, okay, so you could see there was a particular kind of where market was buying from. It was buying from this rejection here, right? And there was a rejection block along this area, or a 4 hours order block here. Okay, 4 hours order block, but I did not buy, or I was not trying to buy exactly from the 4 hours order block. I now went into 15 minutes time frame. Since I was doing that analysis on the 15 minutes time frame, went back to check on that chart to look for how I can what readjust the order block. So immediately I went down here, I saw a form. If this order block was important on the 4 hours time frame, I saw an imbalance here. Okay, so the structure here was simple. It was like this: when market created a low, we had a high, the market created a low, a high, then broke and took out that low and shifted. Before shifting, there was a little bit of pullback and market shifted, creating a form of imbalance here. So immediately I saw that, I was like, okay, good. If I wanted to reframe this 4 hours order block, I'll be targeting this region, right? I'll be targeting this region of imbalance, which is the midpoint of this particular imbalance, right? That's where I'll be targeting. So if I put it like this, let's measure that midpoint. Okay, good. So the 50% region of that 15 minutes imbalance. Of course, everything is I'm using everything as confluence. The reason why I went to the 15 minutes time frame is because market was rejecting from a 15 minutes imbalance on the sell side. So immediately I marked out this region, right? I marked out this region. I was like, okay, if market was supposed to go lower, market is going to take out this, right? Marked out this region. You can even extend it to here, something like this. So if you refresh this, you would see how markets went to mitigate that. So this was where I was buying from, and with this form of 3 equal lows liquidity resting close to the particular point of interest, it gave me good confidence that, oh, market is creating a form of 3 equal lows or 2 equal lows close to a particular point of interest. I'm going to take my buys there, and I'm going to extend my stop loss around this region so that I have space. Once market triggers the sell as TP, it will trigger the buy, and I know that the buy would want to go and attack this particular order flow where a possible sell continuation can occur. Yes, a possible sell continuation can occur from here. You just need to watch how market reacts when it gets to this region. So this was how I was able to catch the buy here. So I did this analysis even before the sell setup played out. So I was like targeting higher regions like this, right? Close, because I know that market is definitely going to attack this point of interest, right? So this was how I caught the sell and the buy setup, something like this. So I did the analysis before it played out. So here I was positioned for the sell. I was targeting, if you look at the take profit for the buys, I was targeting that order flow region, the sell side order flow, right? Because I know that once market taps into this region, okay, would sweep, and market will want to go and target the buys. So, and this is how market is moving currently. So you can see how beautiful the setup played out, right? So you can still see this kind of setup playing out over. The reason I'm teaching it, I'm showing you guys, you will learn from it because it's going to repeat itself, right? The only problem issues may have, you'll be looking at how that's to catch this particular order block. You know, this small juju to be able to refine it like this and be able to, right? So I knew what I saw. I've traded this several times in the past. So you look at that, it's just a normal structure, and you know that all these regions liquidity is actually resting all this guy because this was the high. So before market broke out from here, it made internal structures, and all these internal structures were liquidity, right? And there's an imbalance, so it means I can redefine my structure like this. So I was looking at all of these and still looking at all this new liquidity market was presenting here. So sell, buy, boom, beautiful, right? So now you're now asking, what is the next thing for those of you that want to catch something? So what's the next thing? Let's clear this chart. So go back to our analysis time frame, which is 4 hours time frame, and let's look at what market is doing. Now remember, on the would would I be thinking that this particular point of interest would take market all the way to new highs? I don't think so, right? Because we have identified or seen what the high time frame perspective is showing. So we want to be really, really careful what this market is doing. So what you want to see is, let's calculate, since market has shifted from this level, has moved from this level, we have a range. So I can check the 50% level here and have a target. So if this is a 50% region, right? So I can now mark that 50% region. Okay, I'll go back to the weekly time frame. Let's see. Now, okay, beautiful. Go back to the daily time frame. It's resting at the neckline of this double top, resting and also inside of the imbalance, right? Close to the 50% level of this daily imbalance that market has created, right? On the 4 hours time frame. So possible regions you want to set for sell side would be around the region of this 50%, which is corresponding to the weekly, right? Just pay attention, which is corresponding to this particular doji candle, right? Filling the gap of this doji candle, and corresponding to the neckline of this double bottom or double top. And so I can have, if there's a strong impulsive movement, I can have this as an order block, right? That has swept a form of liquidity here. So this order block here is protected, so I can have this order block region as a point of interest, right? Then market may low a high, broke structure, this neckline here that is also corresponding to the 50% retracement region is also a target. Now, and also one thing to now look at is to see how this daily candle will close, right? If this daily candle can close above with a body, it means there will be buy momentum, right? But if this daily candle does not close with a body, we'll be looking at how market will react very clearly. So I want to, so irrespective of whether it closes with a body or not, I'll be marking the daily key level, right? Just watch and learn. I'll be marking the daily key level. I know some of you will be asking, why is this a daily key level? It's a daily key level because look at it. Look, rejection here, broke out here, rejection here, rejection here, broke out here, it tapped, rejected to the downside, it broke out, bought here, and now it tapped and it's rejecting. So I'll be looking at this key level, and remember this is the 50% key level and this key level. So if you go to the 1 hour time frame now, let's observe. Now good, the 1 hour time frame, BTC, look at that key level. That was the a daily order block. That's why it's huge like this. I can resize it since there's a particular 1 hour imbalance there, so I can resize it like this. I can have it like this, right? That's if price is gonna get here. So good. And now this is there's a particular order flow region here. Now look at the 50% region, and market is, there's an order flow region here. Okay, so it means, of course, you don't want to buy, or you are not selling till market mitigates. Market would want to sell from any discount levels, right? If market is to sell, market should sell from the 50% to high, right? From here to these zones. All these zones are premium zones, all these zones are what, discount regions, right? So all I'll be looking at is to see how market will react when it gets here. If market reacts and close, so if market close, this is the with a body. So if market close above this region, right, with a body, that will signify a good. It means market might want to buy, right? But if market gets to this sell region, there might also be a reaction, right? What can happen is you might see a reaction like this. Market taps into this region, or if it doesn't break it aggressively, market might reject from this region. If it rejects and you see a good, right, level of to catch your entry, you might be able to catch an entry and take profit at this key level. Why am I looking at this key level? Because if market close with a body on a daily candle, there can be a possible buy continuation from this key level. But if market does not close with a body on the daily time frame, right, this area, if market successfully taps into the 50% region, this guy might not hold. This guy might not hold. Market can continue selling, right? So those are the reactions. So you see that we would not exactly know what will happen till market makes a certain form of reaction. So like now, what are the reactions I'm looking at? Market needs to close on the daily time frame with a body with a body candle close above 113,270. If it doesn't, it means market just swept the previous low, daily candle low, and swept the previous daily candle high. So the other daily candle, the new daily candle might just open to take out liquidity, tap into that 1 hour sell side, and continue selling, right? So we want to look at all those reactions, right? But if market aggressively takes out this region, we know that okay, we are going to be looking at the 115k 116k region where we have the supply zone, right? But we should also observe this because market can sell, since this particular point of interest is also corresponding to the daily neckline, right? The daily neckline of that double top, and a 50% this premium region, right? 50% premium zone. So market can mitigate it and sell, right? So those are the two confluence for those of you wanting to catch trades. This is what you look out for. This is what the reactions you want to see on BTC. But BTC takes out this region aggressively, so there might be a little pullback for a continuation to mitigate this region. But if it doesn't, you see that reaction and market will sell. So how do you know market is going to sell down aggressively? But irrespective, if you are catching a sales trade, you want to take profit around here. But if the daily candle does not close with a body, then if market mitigates this side, there will be a possible continuation of the downtrend, right? So those are just the observation. I hope you guys have learned one or two from this video, right? So thank you very much. That will be all for today. See you guys in the next one.